terms of an audit engagement are covered in ISA 210. There are three important learning outcomes from the standard. In part 1, we looked at the first two. In this clip, we will look at the third one. The third learning area for ISA 210 relates to recurring audits and changes to the terms of an engagement. For recurring audits, the auditor needs to decide if a new engagement letter should be sent to the client. A new engagement letter should be sent to the client when there has been significant changes. For example, a change in management, new laws, a change in the financial reporting framework, or a misunderstanding or revised terms. With regard to changes in the terms of an audit engagement, the more tricky area that you need to be aware of is when the client requests a change from a higher level of assurance to a lower level of assurance. For example, in the current year, the CEO of Entity A requested a change in the level of assurance from a reasonable assurance engagement to a limited assurance engagement. The reason for the request was due to a new Corporations Act that allowed small companies, such as Entity A, to choose between an audit and a review. Would this be an acceptable reason to change the terms of an audit engagement to a lower level of assurance? In terms of ISA 210 paragraph 829, it would be acceptable to reduce the level of assurance if there was a change in circumstances or a misunderstanding of the nature of the level of assurance and the work effort and cost involved. However, it would not be acceptable to change the level of assurance when management intends to restrict the scope of the engagement. So in our example with Entity A, the new Corporations Act would be considered a change in circumstances, and in accordance with ISA 210 paragraph 829, it would be acceptable to change the terms of the engagement. Now let's consider a similar request by the CEO of Entity B. The CEO advised that head office, which contained all the accounting records, burnt down during a recent attack on the city. As the auditor would not be able to corroborate any of the financial data, the auditor would likely provide a disclaimer of opinion. In other words, the auditor would not be able to provide an opinion. Thus, the CEO requested that the terms of the engagement be changed from an audit to a review. Would it be acceptable now to change the terms of the engagement? The answer is no. According to ISA 210 paragraph 829, a restriction of scope of any kind would not be acceptable, even if the restriction or limitation was caused by circumstances and not deliberately by management. Our completed spider diagram for ISA 210 will look like this. To recap, ISA 210 is the standard relating to the terms of an audit engagement. There are three important learning outcomes from ISA 210 relating to preconditions for an audit engagement, items to be included in an engagement letter, and the changes to the terms of an engagement.